that's actually going to happen in the next 5 years.
It's actually funny because the biggest holder of Bitcoin, I believe, is the U.S. government still. But anyways,
what happens downstream of that? How do solvers get involved or AI agents get involved to ultimately fulfill that order?
No, we actually didn't set out to build intents. We found intents because we had an actual problem.
So, for example, Solana is super illiquid, more so than coins on Ethereum.
We are going to see a massive shift towards non-speculative crypto use cases. Welcome back to The Rollup, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners.
Redstone is DeFi's modular oracle, supporting over 100 clients on over 50 chains and offering 1,000 assets. Redstone is the leader for Bitcoin staking and yield-bearing assets. They offer the most robust, customizable price feeds available in any model. Join the Redstone exhibition today.
What's going on, guys? Welcome back to The Rollup, Ohio. What's going on? This is going to be a fun conversation. We've got Brandon, we've got Rahul, we've got Rushi, Robbie, GM guys, Ohio, Gun.Fun, Movement, The Rollup, Modular Day, 2025. Brandon, Rahul, it's your first time on the show. Welcome, guys. Would love to have an introduction for our audience to you guys and why you guys are building in crypto. So welcome on.
Wait, before we begin, did Andy dox Rahul? Is it Top G? Is that the right?
No, it's fine. I mean, I'm pretty public. I've got my name on the Twitter handle and everything. So, I guess I'll kick it off. Thank you for hosting us. Yes, my name's Rahul, aka the Top G. My background is in trading. So prior to Shogun, I was a crypto hedge fund analyst, researcher, and then decided to start Shogun with Brandon a couple of years back. I'm super stoked to be here.
Yeah, and my name's Brandon Comer. I'm one of the co-founders, so I handle more of the product and technical side of Shogun. And my background's primarily been in fintech, and so I've been building trading systems for folks like TD Ameritrade and for some of the largest tech companies in the world, like Amazon, before coming into crypto full-time about 5 years ago now. And so I've been building primarily in the Cosmos ecosystem and moved over to Ethereum and Solana recently to start up Shogun and bring sort of this interchain vision to crypto as a whole.
Awesome. Welcome to the show, guys. And Rushi, what are you doing here?
I have bags in Shogun that are far too small for what I do, as well as I'm generally interested in alternative VMs. Have been a huge proponent of improving UX, and the Shogun guys have built probably the best aggregator product to set to trade, swap, be degenerate. I'm a happy user.
Sweet. Yeah. So, Robbie and I both got our start in DeFi Summer on chain, actually. Robbie and I were trading on centralized exchanges in 2017 as freshmen in university. But we were really active in 2020 to 2022 on chain, which our accountant did not like. But we have ran through a lot of the trials and tribulations of the iterative tech improvements, from the first yield farm on Aave on Polygon POS, where you bridged over, and farming that all the way to the DSDs, ESDs, algo stables, and things got very, very fun very quickly. Of course, we kind of saw the ups and the downs there, but that really led us to then this next iteration of DeFi where we are today. And so let's start with some of the core concepts and the user experiences, as well as the user onboarding for on-chain today, and kind of understand where we sit. So perhaps Brandon or Rahul, either or both, how do you guys feel about this iteration from DeFi Summer 2020 to kind of where we are today, and kind of like speed run us through from your perspective on how DeFi has evolved from either the onboarding or the UX or just kind of the core primitives perspective, which has eventually led you guys to build Shogun, which I'm sure we'll talk quite a bit about.
Yeah, so just from a perspective of just how on-chain UX has occurred since DeFi Summer, because DeFi Summer is really what got me to make the leap full-time into crypto anyways. And so back then you saw a lot of EOA accounts. Things were around a lot of manual activity. Basically, the user owned the entire user journey from the inception of what they wanted to do, basically saying, I want to do X on chain, all the way until the point of actually executing that. And so that the user basically, everything was on them. And so over time, until the current iteration, basically what you've seen is, and I hate to use the word intense because it's kind of a LARP term that is really overused at this point. No one really knows what it means. But with intense, you basically separate the user's intent, what they want to do, versus how do you actually execute that. And so most of the actual improvements on UX have occurred in there. Now, a lot of those solutions have taken a very centralized approach. One of the biggest criticisms, I think, for DeFi, especially from my perspective of having having been in DeFi for quite some time, is the move towards a centralized approach, and just kind of eschewing a lot of our original sort of core goals. And you have things like Telegram bots that take people's keys and store them on a Google Cloud server somewhere, and you have things kind of LARPing as decentralization when they're not. There's a lot of dishonesty, especially from the product line, and so I think that's that's a negative aspect. But on the good side of things, the UX is 10 times better. I mean, if you talk about the single chain experience, you look at Solana versus what the old Ethereum experience used to be in terms of gas fees, in terms of the actual account abstraction that you can do there. I think it's just leaps and bounds ahead of where it used to be. And Ethereum itself has greatly improved too. And so with Shogun, what we're hoping is this is that next 10x leap where now you're saying, okay, well, the single chain experience has gotten really good over the past few years. Now let's take that and apply it so that any chain can feel like that. And the users don't even have to really, not that we're abstracting the chains completely away, but we're integrating them in a way that makes them a lot more approachable for folks so that they can trade on any chain, basically.
Very cool. One thing that you said particularly is that intense is kind of a LARP term, which I think is funny in the beginning of all of that. That is what resonated with me because intense and chain abstraction are kind of in a really peculiar spot because of agentic use cases of crypto. And we don't need to get into the whole AI agents conversation, but my current mental model of intense and chain abstraction is quickly shifting into a natural language model, which I can express a desire to achieve a certain outcome. And then that language model, understanding it, synthesizing it, and then actually going out and conducting it on my behalf, potentially using something like Shogun. So my mental model for this has really been kind of shaken up, and I'm sure that yours has also shifted over like the past 6 months or so.
Yeah, absolutely. I think, we actually didn't set out to build Intense. We found Intense because we had an actual problem. So we started out with us being focused on-chain trading. So Rahul, I mean, obviously his name's the top G. He didn't get that name for no reason. He's big on chain. He's one of the original whales of Mudang, and he hit all these massive trades. And so that spirit has always been there. He's always been sort of this on-chain sort of addict when it comes to that, and myself too. I mean, I've been making the leap from big tech to DeFi. You don't really make that unless you actually believe in this type of stuff. And so for us, we loved trading on chain, and the big issue was, okay, well, we like to trade on chain, but we found, when you go to a new chain, there's always yield farming opportunities, there's alpha, there's a lot of things, a lot of opportunities that come with putting in more work that is associated with going to the different chains, learning the new bridges, learning the new wallets. And so we thought if we can make this process a little easier, if we can basically say, we as a company who have experience building in DeFi, who have experience, interacting with all these accounts, if we can figure out how to make that process easier before the actual trader can, then that's a big gain for them. They can basically have that UX without having to go through the process or learning anything new. And so that's exactly where Shogun sprang from. And so through that process, it was like, okay, well, we know what the end goal is. We want to make it so that you can trade any token on any chain as if it was one click, should be pretty fast, should feel like one chain. Well, what's the technology that's going to get you there? We looked at sort of these alloyed assets where you have sort of like, a main asset and you have like these different sort of bridge versions that it kind of looks like an OFT or some of the layer zero tech. We've looked at a couple different options and like managing liquidity across the board, almost like an ag layer type deal where you kind of funnel everything into one layer. And ultimately what we found was, all of those solutions had major cons. The one solution that had a lot of benefit that, gets lost in the larpiness, like I mentioned, was intents. And so being able to separate that user intent, being able to say, okay, well, this is what the user wants, and we have the freedom to execute in any path, that's where we can do a lot of damage. Where a lot of folks, I think, a couple years ago, they were trying to be intents companies for actually forming intents. You look at like a Noma, for example. It's like, how do you generalize the intent process to make an intent? But that's the easy part. Filling out a user's intent, like you said, you could strap an NLP like a chat GPT wrapper and figure out how to do transactions pretty easily. They're already doing it today. Intents is not the battle. It's the execution of the intents. And so that's where we do a lot of damage. And you mentioned agentic intents, which is a big focus of ours. You can actually just strap on an AI agent directly to this and be able to perform any on-chain action. And so we already have live bots that are doing this, where there's a plugin for Shogun in the ELIZA framework on Solana, and there's actually bots like Thales that are trading on Shogun right now.
And so we can't really talk about the execution of intents without talking about solvers. And so maybe you could walk us through, like, okay, you mentioned the easy part, actually writing down, maybe it's in natural language, what exactly I want to get accomplished. That's the easy part that you mentioned. We'll kind of skip over that. Once I submit that intention, what happens downstream of that? How do solvers get involved, or AI agents get involved to ultimately fulfill that order?
Yeah, exactly. So the way we do it, and it's a pretty centralized process in the beginning, and obviously there's a decentralization process that occurs over the future. But the first step is everyone basically participates in a Dutch auction. So it's a pretty traditional setup for an intent auction. You have basically the trade comes in at a little bit higher than what the user was looking for. We try to basically maximize that through what we call TEV, trader extractable value, sort of like a memeified version of MEV. But geared more towards maximizing what the trader gets in terms of their output. And then from there, that auction process, basically all of these solvers bid, and it's a blind auction process. It starts really at a very high price, slowly whittles down through a decay function, and then once it reaches someone's max bid, that executes, that person wins. Now, the actual execution of the intent, it almost looks and feels like a short-term loan that's close to instantaneous. And so what that means is a user basically sends a signed order to the off-chain process, the off-chain order book. From there, once that competition is actually won by a solver, that solver then deposits the tokens that they're looking for on the destination chain. At that same time, a validator is basically looking at all of these different smart contracts, sees that event happening, cross-references that with the actual trade, sees that it's successful, and then lets those funds go on the source chain. And so ultimately what's happening is that short-term loan of something quick on the destination chain, and then the user's funds are eventually released to the solver so that they can balance their books.
And do you guys use any kind of resource locks or state locks in order to make sure that the funds don't get double spent while that short-term loan is being issued on the destination chain?
Yeah, exactly. It's a pretty standard model. I mean, I think if you look at most intent-centric protocols, this tends to be like sort of the classic way of doing it. We don't try to get too fancy with this. Our major sort of value add here that we're looking for is breadth of coverage. And a different thing that we try to do as well is there's really two levels of the stack. There's the intent auctions themselves, and then there's within the solvers, they're all basically running the aggregation services of things like Jupiter and dBridge and Across. And so we get the best of both worlds, where if we can solve it at a faster speed, we'll execute it. But if we can't, say it's an EVM network that we don't need to solve, Across already does that, we aggregate that into the API as well.
One last thing on that is that, like, the extensibility, like the long tail, right, of assets and chains, you guys are solving that yourself, right? And so all across, maybe, these major solvers that have deeper liquidity are solving it on the more prominent routes. But when it comes to the longer tail of assets, you guys are picking up the slack.
Yeah, exactly. So what the philosophy was, there's sort of a trade-off that happens here. You can kind of go for maximum support, but you're going to have large costs that don't necessarily align with what the profits you're going to be making are there. And so there's that aspect of like supporting like things like an L3, like say Xi or some of the Arbitrum L3s that are out there. There's not that much value flowing through them. And so if you try to do everything yourself, you're going to get into a situation where you're spending resources on something that someone else has already built, and you can just use that. And so that's where we try to pick our battles. I mean, having Rahul sort of his lens of like knowing what people are trading on chain and really dialing in on those networks. That's what we're focused on. And so yeah, if we can build it better, we build it ourselves. Or if it doesn't exist, like with some of the stuff that we're doing in the Move ecosystem, we obviously build it ourselves. But if it exists currently and it performs up to our SLAs, we just use the existing solution.
Anything to add there, Rahul?
No, I was just going to say, like, Brandon hit all the points. So, especially from my perspective as a trader, I mean, like the biggest pain points are, and this is more relevant today than it has been in any cycle, is just the ultra fast rotation. And now it's like you got like these daily runners, and like, there's a few ecosystems like Base, Solana, hopefully Move and Bear in the future, Hyperliquid, right? So like you always have to be online, or you miss like some big pump, right? And like before, especially in 2021, you're fumbling around like spinning up wallets, figuring out how to bridge. Surprisingly, there hasn't been any bridge hacks. So I think like maybe that's where the solvers have really, with the social pressure of not hacking, has come into play here. But yeah, like that's the biggest improvement that we try to aim for, is just that seamless trading experience. And like if you see my Twitter, I'm like posting my trades using our first product, which is a Telegram app, and then we got the web app and mobile app coming out pretty soon.
Dude, this guy Top G is such a trader. Look at the room he's in. He's got the exercise bike and the bed, and that's it. You don't ever have to go anywhere.
Yeah. Yeah, I had a pretty insane run in Q4, but unfortunately,
What'd you hit?
I hit a lot. I hit like the Catholic mascot Luce. I had like 3%, so that went from like I had like 10 mil in that it was for like 10 days. And then obviously Mudang, I had like 4 or 5%. Yeah, Skibidi, it didn't run that high, but still it went to like 80 mil. I had like 4 or 5%. I've hit so like I can't remember, but I remember my family was like, you should start counting how much you have, and at one point it was like 35 mil, and yeah, but since Trump and Melania and all that, like on chain has just taken such a beating, because now there's no repercussions and like everybody and anybody is launching a coin, so yeah, the meta has shifted, but
Yep. Portnoy coin just got smashed. So I think one thing that's particularly interesting is the way that the market mechanics are operating now, and then how this affects your guys' products views. And Rushi, feel free to jump in here as well. But I think that there's a bit of a miss. There's an inefficient dynamic right now where if you're the earliest to a project, you get the most upside. If you just have a random selection with some sort of like accuracy based on like getting a good tip or getting a good idea or it being a runner. Whereas like in the actual stock market, in actual markets, what is rewarded is value over time. It's picking the winners based on fundamentals. It's creating these long-term games, these long-term bets with projects or companies that are, I guess, like, just changing the world basically or impacting the world. Whereas right now on chain, it's like, if you can be the first one to buy Portnoy coin as soon as you see the tweet, you are in such a better spot than the next people over the next hour, 2 hours, and 4 hours. And that dynamic is just inefficient and like not the way that markets really work.
it's not sustainable for sure.
It is not sustainable. Like all memes have kind of died off after Melania, and like they had Portnoy coin that had like a rise for a day, and like I think what you're seeing is like Cabal coins. Like we all know who like the $50 buy, like $100 buy is as soon as it opens, turning to $1 million. Like I think that turns off a lot of people, but ultimately the fair launch space is net positive. I think like memes have done like good stuff for awareness, and will continue to do stuff, but need better mechanisms to prevent snipers and stuff. But I think Rahul can touch on that.
Yeah, and naturally, I think like it's speed running value extraction, and I think like the participants will get smarter and realize that okay, like this is not sustainable, and like we'd rather start flying quality. Like so, like for example, Hyperliquid, is I see a lot of traders now rotating into that, and they think that okay, well, this at least is generating a lot of revenue. They're doing buybacks, and I may not do a 10-20x, but I may not do 100x, but I could do like a 5-10x, right? So I think the market is naturally getting smarter. And yeah, and like even so, there's like pump fund competitors that give back to the ecosystem, like GoFund's meme. And I'm not shilling this; I don't have any bags in it. There's been plenty of competitors, but yeah, I think like you're going to see new models where, for example, like the dev can make money off of LP fees rather than him buying and sniping and dumping. Or the team, not like the team just kind of extracts the fees for themselves and like sells whatever the base layer asset. Or there could be like a pump fund, which I think is coming, where the creator has like a default, like sort of a vesting schedule. So like any founder, like, we have the Jelly Jelly and the Vine coin, right? Maybe there's an iteration where founders launch and it's like the vesting is set. And then it's more implicit trust, right, in the token that you're buying. So yeah, I think you should start to see some of those iterations to address the flaws in the current broken system.
Yep. I think that's particularly important for new ecosystems as well. I mean, we have Rushi here. Obviously, you guys are quite close to Bera. What you don't want in the beginning of your ecosystem is basically a bunch of kind of malicious snipers and devs spinning up memes and trying to just rinse retail over and over and over again. It's very extractive and kind of turns people off. And so when we're thinking about that from Solana's perspective, it just feels fatigued. It just feels like we've done the iteration. Like, I'm not saying that Solana's meme cycle is like coming to an end by any means, but it's just that like people are getting smarter and design mechanisms are changing. And so, yeah, I mean, even just using a Telegram bot versus having to use a ledger and plug it in, and it was just a huge alpha over the last 3 months, just because of how easy it is to spin up on your phone and just kind of get in and out. And so, yeah, I think that market dynamic changes, and I think that we move towards more of these like longer term thought out meme coins in a way. But also, I think there's also a return to fundamentals, and that entire idea is still taking its place slowly, where there's a lot of changes in the market happening, and even prominent VCs themselves, like Hasib, are putting out new tokenomics models different than the standard vesting models. And so there's a broad change here that is happening. And Murad on our podcast with him said that meme coins are the purification of crypto. And while it may not seem like that from the outside, there is certainly that effect happening. And Rushi, you kind of just hit on that. But any closing thoughts on this loop here, guys? And then we'll kind of jump back into some of the technicals and what you guys are actually building.
Yeah, I mean, I think like with investing stuff, like the staking reward stuff has been controversial. Like we saw the bear launch, and people are upset about like a bear staking module. I think like the Cosmos precedent, like TF with high staking rewards and like investor lock token sale was never conducive and kind of rugged retail to some capacity. And for some reason, like this, people associate TF with future Cosmos chain launches. And for movement itself, investors can't stake lock tokens, teams can't stake lock tokens. I think like that's the whole point of investing to not be able to get tokens in a month or 2 months, because oftentimes what happens is when you have lock token staking, investors like, such a cash out of position in 3 months, and you see that in the charts, and especially when there's no liquidity, there's no buy pressure, like the charts often take a beating, and the retail gets dumped on, and then so I think like those mechanics have been avoided, and even in niches like, and then they weren't doing staking and stuff. So across the board, I anticipate that practice going away.
Yeah, I just think it's going to be harder for VCs and just early stage investors of any sort to make as much gains as they have over the last 7 years. It's like what's going to be required is you pick the right teams. I think after this cycle, I think this cycle we still kind of have we're sitting here and we've got a chain with no chain and a token. So I mean, like things are still happening for this cycle, but I think it very quickly like it becomes a game of picking the right projects over 2 to 7 year time frame, really, instead of like a 3 month to 2 year time frame or 3 month to 3 year time frame. And that will be a lot of winners, but there will also be, I think, after this cycle, especially, and we've already seen this from 2017, but the emergence of these kind of dino chains and dino coins will really start to show, similar to kind of 2000 and 2001.
I think like the holder base, or I guess holder base is the wrong term, but the participants of this cycle, it seems like their attention span has gotten like a lot shorter. And it's like the market has been trained to just dump and like, not believe in something, as corny as that sounds. But yeah, I totally align with Murad, and you just mentioned him. I think his philosophy is spot on. And I think eventually those that stay in this space are going to come back to that, where it's like, like the short-term gains or the instantaneous gains are no longer sustainable. And we actually do need to believe in something. We do need to form a community and, and align with a vision for, multiple years. So yeah, I think obviously like movement may not have a chain, but they've got a pretty good community and a firm set of believers. So we definitely look up to Rushi in that regard.
Yeah, I think that's it's very important, right? It's what matters, and I think we're the market's getting there already. It's getting to be people are tired. It's just believe in something, man, and just get the directional idea correct over the next 5 years, and you'll be fine. Don't there's sure there's rotations, but okay. Zooming out to the idea of Shogun with movement and Barachain, kind of what's happening there from the technical side. Brandon, your experience been building in different execution environments for Shogun?
Yeah, so I actually just released the tweet announcing we're live on Barachain, and so yeah, it's tough building on different VMs. Not gonna lie to you. There's not, part of our pitch back in March of last year was, if you look at the top 10 of projects on Solana, for example, by TVL, you're gonna see maybe Lido's in there, if that. And so it's not a lot of folks that are taking an EVM based application, porting it over to Solana easily, and then just porting that over to Move and porting that over to, say you get into Cosmos and you want to do no one really wants to go to Cosmos, right? But say you wanted to do Cosm that's a whole nother thing with, Rust-based contracts and stuff like that. And so having the ability to kind of bounce back and forth, and Ton's a great one, a C-like language there that's kind of not like anything in crypto. So you think about all those different ecosystems, and a lot of people falter when they're trying to just port something over from, say, one to the other. But if you start with first principles and you design with that interoperability in mind, which was something that we had to learn a lot about through the process. But if you design with those things in mind, I think it's a lot easier. And so Shogun as a base, the entire product is designed to work on these different ecosystems so that we can just basically standardize and create adapters where we need them versus creating a whole new piece of software. And so I think that's an advantage that we have over others, our ability to also just incorporate other things into our aggregation, other solutions. You talked about the long tail earlier. Obviously, if you're trying to get every single long tail asset, you're going to waste a lot of resources there. But if you can pick up an API that has, say, this obscure DEX and that, and another one has another one, and if you can bring them all together, I think you get these sort of pieces of the parts add up to more than the whole. And so that's exactly the strategy of what we're trying to do. And building on Barachain specifically, I think it's been just an overall great experience. Obviously the first testnet wasn't all that, but the second testnet as well as the mainnet launch, no one's talking about Barachain not working properly. Everyone's talking about it maybe working a little bit too easily to dump their Bara on Kodiak or something like that. But no one's saying that they can't sell. So that's a big thing. The mainnet works, the actual tech works. So as a builder, you can't really ask for more than that. I've been on some chains that do not work, and so that's kind of table stakes. And then the community has been great too. Just having the ability to have X amount of users to test your software who actually just really care about crypto as a whole, and they don't. A lot of them didn't even get airdrops if you kind of look at the comments too. So these guys are really rabid. They're borderline mental, and they love DeFi, and so having those as testers is never a bad thing.
Definitely. When you're thinking about this launch onto Movement or your intense platform on Sui or on Aptos, which of these is the greatest 0 to 1 for user experience or for the core problem that you guys are trying to solve? Is there one of your suite of ideas that you're okay, this is what we are most excited about because XYZ, and like what is that, and what's the breakthrough there from the technical perspective that wasn't previously possible before?
Yeah, so I think making everything feel like one chain is probably the biggest breakthrough. And we try to keep it simple. We don't like to go too deep into like, here's X tech innovation that changes one little thing and this is going to be the game changer. The goal is the end goal is trading any token on any chain. And so that's the big competitive advantage. That's like the North Star that we're all going towards. Any technical innovation from there is just to add to that goal. And so I think intent-centric design for the move ecosystem is going to be pretty cool. Being able to bridge back and forth and do swaps between, like, say, SWI and movement with like the EVM and Solanas of the world and Barachains and other L1s within a couple seconds, that's going to be pretty cool. Think about the unlocks there. I mean, I don't even know what wallet you would use on SWI, and I'm building on it. And so there's an example there of like, what do you expect the average user to be able to do in order to get to the ecosystem? So I think that's probably the biggest 0 to 1 right now is what we're doing with the interconnectivity of it all. Being able to one click into that's a big change. You don't see that in a lot of places. And if you do, it's typically a pretty jerry-rigged solution. But having a standardized set of being able to get from any token on any chain. That's the big innovation. The speed on movement is going to be interesting, I think, to a lot of folks too. Move has some interesting aspects to it that allow like formal verification and things like that allow you to go a little bit faster in some cases than with other chains. And so we'll have some case studies where we detail some of the advantages too. Building on all these things, you kind of get to see an inside look that a lot of folks don't have.
Okay, Brandon, to be very, very, very straightforward, that may have been compelling enough to bring people over, but like if I'm a Phantom user and I'm really, really stuck on Phantom and Rabby, and I just don't care to change my habits at all, like, are you optimizing for people like that, or are you optimizing for somebody who's like, you know what, I'm either new to crypto or I came in and I'm looking for my home? And like, how are you thinking about those two sectors? Because frankly, like I've just been such a Phantom and Rabby user that it's just like even downloading something on Telegram, I'm just kind of like, oh, or trying a new wallet. I'm like, does it have Ledger compatibility? Because if not, I'm not touching. It's just so it's like it's these constant iterations that from the user side that I've just been kind of like very sticky with those two places. So how do you think about that kind of dynamic? And also, maybe it's not for me. Maybe it is for new users. And Ruhu would love to hear kind of your thoughts from the user perspective too.
Yeah, just to take a stab at it first. So you're right. Like folks are going to be entrenched into the places that they trade currently. So Phantom, Rabby, whatever the case may be. But the option. So what we're trying to optimize for here is obviously the folks that are trading currently. And so we do have an integration with Phantom coming out, MetaMask, all of the traditional wallets that you use as well. Obviously, we can do a lot more with our smart accounts. It's basically how do you get folks from their existing solutions into what we're doing, and so there's going to be an education aspect to that, and so you're going to be able to use Shogun directly through directly through Phantom, and directly through MetaMask and all the wallets that you already talked about. So that is coming regardless, and then Shogun as an account system or with the complete abstraction aspect, that's going to be something that really welcomes new users, and so it's kind of a two-pronged approach, basically. For the existing user base, you can have the Phantom and the MetaMask integrations, but for everyone else, they're going to be able to have this cohesive account experience where everything's already put into one, and they don't necessarily have to even learn those new wallets. And so having a solution that really fits the new users that are coming on through the memes and through some of the innovations that we see today through Solana and some of those things, but also having the functionality that core DeFi users can use today.
Could break down like the different segments of users within crypto. So for example, with Telegram bots, right? People are used to like whatever Trojan and Banana, and in their cross-chain instance, you have to manually download different versions of the bot. Like there's one for Solana, there's one for Ethereum. For us, like Brandon mentioned, we kind of have like this universal account or aggregated UI, and so I can make cross-chain swaps just within that window, and that's like a 10x improvement. And like those power users on chain, they're familiar with like a Telegram UI, and so I think right now we probably have the best one in the space. And then, like Brandon mentioned, once we get the web app, that's going to be, similar to Photon, and so that's where we'll have to compete. Correct me if I'm wrong, Mr. Fairford.
No, you're doing great, Top Jeep.
Rushi, from your perspective, like, these guys are going to be deploying a movement as well as other networks. How do you think, an intent-based solution that is primed for quick routes could kind of help bolster the entire network effect of the entire ecosystem? Like, do you guys have really strong interop between some of the apps that are on the in the ecosystem now? If not, what does like that fast interop look like? What does it mean?
Yeah, I mean, we have like yield aggregators like Mosaic that are plugged in directly to all the dexes. We have like a lending protocols, et cetera. So within the chain itself, I'd say it's a pretty solid ecosystem that connects to each other. You have layer zero, wormhole, et cetera for bridging. But I think the main play here is like obviously our users and people who are using crypto are active on multiple chains. You have like people on Base, Solana, even like Cardano maybe. So how do you combine all the capital across these different chains? So I think there's still a missing in the market for all-in-one platform that I can just deposit on Base, swap meme coins and movement, go LP in Ibera, and dump my tokens on Ethereum, right? So that kind of flow doesn't exist today. Normally people do exchanges right now, like buy-ins to Coinbase and stuff. And I think Infinix also is working on something similar with their product as well. So if Shogun can be essentially the multi-chain be Jupiter on every chain, and then combine that with one UX, you have a pretty transformative platform that exchanges, Infinex's walls can all integrate and be the middleware that you need.
Yeah. Because a lot of this is kind of connectivity amongst the apps that we already have. I mean, there's maybe a conversation to be had around new primitives that could pop up once we have a more unified ecosystem. Maybe there's some thought being, given to that. And so if there is, basically, we started out by talking about how, the current meta is unsustainable. Like the current meta around meme coins is dumping. People come in, but if they're not the first one to see the tweet, right, they're in a improper position. And then, this is not a market architecture that is conducive to new entrants, because they come in, what do? They get dumped on immediately because they bought, 2 hours after the thing launched rather than a minute after the thing launched. So they weren't in a winning position to begin with. So basically, I'm thinking how do we solve that and kind of build to where we're going next? Like, how do we skate to where the puck is going, right? What is the new meta, the new meme coin market evolution that comes after this current unsustainable one? Top Jeep, maybe you could just, even if it's just speculation and you're kind of just thinking out loud as to how you think we transform the current market structure from an unsustainable one into a more sustainable one. What do you think that transition looks like? Imagine if the world's GDP moved on chain. Guys, say GM to SafeNet. The newest protocol by Safe isn't a blockchain, and it's not a new layer 2. It's a transaction processing network built to send money anywhere and swap anything on thousands of layer 2s from a single universal balance in sub 500 milliseconds. It's fast, it's smooth, and it's simple. And it's built with safe multi-sig level security in mind. SafeNet unlocks smart accounts across multiple chains, allowing users to supercharge security, scalability, and speed. So get started today at net.safe.global, and remember to follow @safe on X.
I think fundamentally the psychology of the investor participant, like the investor base, has to change. And I think it's going to change naturally, as we've been talking about how the current meta is unsustainable, and 99% of people lose their money and 1% win. And I think in general, the space, we've just been spoiled with quick gains. But if you talk to people in TradFi, where it's oh, you can get a 20-30% yield through some complex yield farming strategies, that's pretty good. And so yeah, I think it's just a matter of time until more sophisticated, patient investors come in this space and they appreciate whatever the open access, permissionless nature of our industry. I think other industry participants also, like sexes, market makers, they have a hand in it as well. So if you're a tier one sex, like don't go crazy with listing absolute dog shit. But that's not something us builders can control. And then like so for example, Solana is super illiquid, more so than coins on Ethereum. And that's something that I did not take into account when I ran up the scoreboard in Q4. It's like the cascading of the sell pressure makes the price go way, like it goes down way faster. So I think there's got to be improvements in like on-chain liquidity, and like we had proof of like protocol and liquidity last cycle. Sure, some sort of pump fund mechanism where it's like I never advocate for sell tax, but that's what worked on Ethereum. Is like sometimes when you sell a token, the tax gets added to the LP and it adds liquidity. I don't think that exists on any Solana tokens. So yeah, maybe bringing some of that back can help. But overall, I think like it's just the psychology of the investor base, which is just going to naturally mold through hard times. They're going to learn to be more patient.
Yeah, I also have a question for you about the culture of different chains that you've interacted on. Like, what is the core culture difference for speculators from Solana to Ethereum? What's the differences that you've observed? Yeah.
Yeah. So that's part of why I know Murad's list, like not all of it has done well, but there's a few coins that have done well. And I think relatively speaking, it's drawn down less than any like for example, Mudang went from or Chill Guy went from like 700-800 mil to like 35 mil. So like like basically like I was joking that Bowden was one of the worst crashes in any asset class history like ever. I was talking to some like tax accountant, and then I didn't know that was going to happen to my bags a few months later. But yeah, so I think the older class of 2017, they were able to hold things for months on end and enjoy steady gains. And so that's the whole thing with like Murad's like SPX and whatever Apu, like that holder base when he made that list, that was catering to like the older 2021 2017 class, and they understand that like you have to form a community, you have to form a cult, so to speak. So that's the culture in Ethereum, and with the Ethereum whales, which is still prevalent. I think that's why Arbitrum still has all this liquidity. It's like all this old DeFi money, right? And they're kind of just like hungry to have that meta come back again. Or you capitulate and you go in the Solana casino and get your ass kicked. And I've done that too. I've played in metas I have no edge in and just get wiped. But yeah, so that's the Ethereum sort of ecosystem culture. Is you can hold on to something for months and enjoy steady gains. They have the ability to believe in something more than participants on Solana. And so, yeah, the Solana culture, because transactions are cheap, because anybody can launch a token, it just makes it easy for, it just speed runs the value extraction as sophisticated actors are churning out thousands of coins a day. And yeah, because transactions are cheap, you also have these Zoomers and like just a younger demographic who think that, oh, I turned $100 into $1,000. I just made like my monthly salary or something or whatever, my monthly allowance. But for like a whale on Ethereum, or even just like not a whale, but average participant from the like 2021 days, that doesn't really move the needle. So yeah, it's more what they call GD Solana. It still has that reputation and that culture, which has been kind of frustrating. So yeah.
Do you think that so this cycle Solana has kind of eclipsed that store of value monetary premium conversation like Ethereum did as a result of DeFi in 2020 and 2021?
So your question is it a good store of
Like
value?
when you sell your meme coins to Solana, do you feel like that's your forever bag, or do you still feel like maybe you should go back the other way?
No. So if you look at the market cap of Solana, it's like almost 2x, but the price of the SOL token, I think it may have surpassed its all-time high, but barely, right? So that means there's a lot of inflation. So I know that the foundation and Solana core team is saying they're working on the inflation problem. but I don't think it's a good store of value. And also, like, you have teams that, like the picks and shovels, like Pump Fund, they broadcast like they've taken all these fees in Solana, they've moved it onto a SEX. And I don't want to speculate thinking that they're selling, but I mean, that does broadcast that you're doing something, it's probably selling, right? So when you have like leaders of the ecosystem doing that, it also signals to the rest of us that maybe this is not the asset to hold. So yeah, and I've talked to other traders, and like the ones that are really in the casino, they tend to they'll cash out in USDC, and they get into this habit of wiring a lot to the bank, and then they'll keep like some like their dry powder is in USDC. It's not in Solana. So basically, they want to try to play that same game of hitting a 10, 50x or whatever. And then, if they hit that, they'll cash out into USDC, wire that to the bank, and then keep some dry powder for the next play. But yeah, the consensus seems to be that people don't want to hold Solana. And then you also got these unlocks coming, which we'll see how the market absorbs that. Maybe with like the inflation issue, if the Solana team does work on it and it's reduced, and you have like a sole ETF, perhaps it can get to a point where you have the narrative with Ethereum where it's like ultrasound money, which I mean Ethereum's price hasn't done that great, but yeah, I could see a narrative forming in the future where it is a, like Kyle Samani says, non-sovereign form of money. But for now, that's not the case, and like you can just tell with the market cap chart and the Solana price chart, there's a lot of inflation.
Makes sense. Yeah, I was curious because I think that we had a pretty good conversation with Tarun and John Charbonneau about this, where also the collateral value of Solana itself is not nearly as good as Ethereum, because you can just stake your soul in a validator and earn 8%, and you don't need to deploy it in DeFi strategies to earn. And so that really reduces the amount of monetary velocity in a given system, which then reduces the overall amount of basically speculation and, activity, which drives value, drives fees.
It's funny you say that. I feel like for the last year, no one's even talking about. I know there's like Geo Soul, I guess could be sort of that, like LST that you can use in DeFi and stuff. But I don't know one single person that's using any sort of money market or any yield farming in Solana. Now it's like there's a token with high volume, and let me go on Meteora
and buy
this LP and like earn fees that way. But yeah.
Stoney tweeted about that the other day. He got a lot of pushback for it, but he was like, basically, like, Solana DeFi doesn't really exist. Like, and then Camino quote tweeted and was like, well, hello or something. And it was
that's a great observation though, because it ties in just directly to the psychology and culture on Solana versus Ethereum. You don't have any semblance of patience on Solana. And for DeFi to work, it takes some element of patience.
Yeah, 100%. Yeah, it's the ultimate casino right now. That's how it's positioned. It's not really for yield farming or complex DeFi strategies. Maybe it'll change, but yeah, right now it's Brandon.
Anything to add there, Brandon or Rushi?
No, I was just gonna ask the top G, what is the Barachain trenches culture like?
Well, given that we just launched our integration on the podcast, I'm going to play around with it more after. But I think it's the jury's still out. It's yet to be determined. I think a lot of the exciting stuff that's going to come on Bear isn't in existence yet. So I'm pretty optimistic once all that's out, like proof of liquidity and like exponents, and there's plenty of exciting. So that's the thing with Bera, the background, like the core contributors, they like Jack and Sammy, who's the founder of Redacted. They're all like very good at DeFi mechanics, and they came from that 2021 cycle where they've like designed own Ponzi's, and so yeah, I think there is an untapped market of like that older class that's looking for that intellectual stimulation in DeFi. And I think like that's where Bera can ultimately win out. I'm not sure if it's going to be in the meme space because I think Solana's already got that and it's pretty entrenched. But I think like the Bera DeFi ecosystem, once it's really blooming, I think it'll tap into that, like the Tetranodes of the world potentially, if they can strike a deal with them. But yeah, but that kind of like profile is what they're probably going to win out.
I agree. It feels like that user base has been very dormant on chain. It's basically ended up being just toss your ETH and Aave and borrow stables against it just to live on and wait, you know? And I think that's what a lot of the big ETH whales have done since.
100%.
Okay, guys. So our community is going to want to know how to get involved. What's the alpha? What is some asymmetrical information, ideas, thoughts that hypothetically could or could not be true, and could also come from Rushi on how to best get involved with Shogun? What is the application landscape? What can we do today? What can we do tomorrow? And how can we set ourselves up to be a strong part of the Shogun community in the future?
Yeah, so first things first, get trading. So there's a trading bot on Telegram that you can sign up for, as well as the web app just was released at gun.fun. So if you go to gun.fun, you can set up a actual wallet within a couple clicks. Your Face ID is essentially your seed phrase, and then from there you can just get to trading. And so this is the easiest way to trade, going to and from any chain, and also in intra-chain transactions too. I'm using it for all my Solana trades. And it's the easiest way if you're really looking at Barachain and you're like, okay, well, that's something that I want to be a part of. I want to check out some of these assets. This is one of the easiest ways to get into that ecosystem. One-click trades from any meme on Solana, any meme on any EVM, pretty much directly into it. And then we'll be adding a lot of network support from there. If you're not interested in Bara, or if you're a little upset at Bara, it's also the easiest way to dump your Bara and go to another ecosystem. And so we hope either way you'll use the product. The alpha, so there is something, I've heard of something called the gun list. I can't confirm or deny if that's true, but if there were a gun list, I would get the trading and really trying to get my numbers up in terms of the point system we're going to be dropping. And so alpha really starts later this week. We've got a referral program coming out. We've got a points program coming out. And it's going to be super gamified, and it's going to affect a lot of folks, especially within some of the ecosystems that we're launching in. So just stay tuned for that. You'll see a lot of announcements for that. And that's primarily how you're going to be able to get involved in terms of any alpha.
Awesome. And Rahul, what's the best strategy to try on gun.fun these next couple of weeks to months on chain? How can I best take my portfolio of 1K, 10K, or 100K and try my best to not nuke it to zero? Because I have a good time doing that on chain on Solana, but going up the last couple of weeks, that's been somewhat difficult.
Yeah. So I do think there's going to be a flight to quality. So like Murad said, find those cult coins. I talked about this in a different pod, but there are some OG sex memes. Like Bonk is pretty beat up. Look, if you have 10K, rather than try to go and find new pairs on Solana and like nuke it to zero, you could get a clean 5x in 2 months with something like Bonk, especially because now there's speculation of a Doge ETF. Bonk is like on Robinhood. Obviously, it's on chain on Solana as well, but it has the best distribution. And so yeah, that's one thing. Or if, let's say, like Barron Trump finally decides to launch his token, and you got stables on, let's say, Barachain, and you're like, fuck, it's on Solana. I really need to swap this and like keep some in the Shogun Telegram app, and you can just with one click, FOMO into Barron's coin. Hopefully, it's the right one and it's not a rug. But yeah, there's like that barbell approach where I almost treat like the OG memes as like major assets like Doge and Bonk. Those aren't going to go to zero. If anything, they'll slow grind up. And then there's like sure shot runners, flavors of the month. Like we've had like Mudang in September, October. The AI like Fartcoin Goat in later months, and then like we had Trump in January. So whatever that is in February, you could potentially cash that. And the nice thing with us is like you don't, wherever your dry powder is, you can easily swap it over to whatever chain that launches, and it's most likely going to be Solana.
It's funny when you say flight to quality, I start thinking about like the major crypto coins, and then you start talking about more memes.
So yeah, like
you're a boomer, Andy. 20 classic
Wait,
2017 talk.
Yeah, look, it's also macro dependent, right? I think we're going to get rate cuts in March, or not. Maybe, yeah, I think there's going to be hints at quantitative easing. So I think like for risk on assets, it's going to get favorable. And once that like switch is turned on, it should be easier. And I just look at something like Bonk or Doge as a leveraged, way to play something like Bitcoin or Solana, respectively.
Maybe we ask our resident Fed. Any macro thoughts, Rushi?
Well, I think that the new administration is leaning levels heavily hard in crypto, whether it's like actual purchases of tokens, implementations of tokens, or actually just using DeFi. So I think we'll see like the next 6 to 12 months a lot of DeFi usage and actual like blockchain usage. So I like to say there's crypto and there's blockchain. Crypto is like the Bitcoin reserve, the ETH reserve, something like that is on the radar. But then there's also blockchain usage, which is like getting branches of the government to tokenize, to have transparent spending, and like that's more of a long term. Like here's why Bitcoin's gonna hit $1 million at some point, right? So I think like there's gonna be ups and downs. Like markets probably shit right now. Will continue to be shit for a while, but I would say like March, April, May. In March bounces back, and then all survived.
And Rushi, you recently got some flack for a tweet saying that we need to pander towards the politicians. Could you please explain that to the libertarian fuck you government crypto audience?
Look, I'm as fuck you government as the next person. I think again, this blockchain, this crypto, the crypto like the Bitcoin, the BTC and ETH tickers and the token supply should always be free supply. No one should own Bitcoin. It's actually funny because the biggest holder of Bitcoin, I believe, is the U.S. government still. But anyways, the ultimately the spirits of Satoshi and whatnot is always open source and be free spirit. My point was on the blockchain technology. If we want like the Doge division to actually use one of our blockchains, tokenize, have the ability to have transparent spending. There's actually a lot of use cases that I'm like going DC Thursday and talking about it as well. For example, like we're looking to US aid right now, right? And there's a lot of spending that happens for US aid that God knows what. Even the Ukrainian president was like, yeah, people said we got 150 billion, but we only got 50 billion. Where the rest of the 100 billion go? So imagine like the United States government send the Etherscan, ETH payment of $100 billion, and you could be like 10 billion goes to food, 10 billion goes to shelter, 10 billion goes to like I don't know, like clothes. It's funny because like when the earthquakes happened in Turkey, I think it was like 1/3 of all kind of remittances and payments to help the disaster relief was in crypto. Because if you send it directly to the government, they're going to seize it. Same thing with in Yemen when the Houthi rebels bounced back and were taking over the government. The majority of the aid relief was in crypto directly because the Houthi government was taking over all bank-to-bank wires. So, like, look, I don't really care about the anons that come after me. Like, if you're trying to build something that's non-grifty and be around for 10 years, I think that getting blockchains implemented in governments and big institutions is important. Crypto itself should be free spirit. Bitcoin, Ethereum should always be free spirit. But like, I don't understand why you can't have both. Why don't we want more users? Why don't we want governments running our technologies? It shouldn't be like they own the Bitcoin protocol, they own the Ethereum protocol, and they own the movement protocol. That'll never happen. But it'll be like Snapchat. Like the government doesn't own Snapchat, but obviously has regulations. They use Microsoft, but they don't own Microsoft, right? So like ultimately, I don't really care.
Yeah, no, I mean, look, there is the ETFs are in particular are a very interesting paradox though, because on one hand, we appreciate the ability to have new entrants buying their fair share of the networks that we all own, especially the younger people, the older mom and pop participating institutions. But on the other hand, well, what we're effectively doing is just piling more supply of these networks into BlackRock, into Grayscale, into these large kind of institutions. So kind of a paradox there happening. One, two is some people don't like Trump at all, like at all. So you talk about positive things about working with governments, and they associate it with Trump, and there's not a good feeling there. And in crypto, people can be liberal,
Yeah, I
like
mean,
in
like
terms of like left leaning.
again, it's not about politics. Like I actually like don't comment on politics, but there's one side of the government that SEC notices for the Uniswap and OpenSea and put the founder of the Trinity Cash and Silk Road in jail for the last 10 years. And yet one that is speaking it on the summit and talking about the most bullish things like stable coins, reserves, and like not sending me to jail. So like as a crypto founder that has a top token at CoinMarketCap, like it's something that we think about. It's like I live in New York. At any moment they can knock my door and take me down. I'd rather be with the administration that would buy my bags and not send me to jail.
Rushi, for Elon to put the treasury on chain, which chain do you think is in the best position to handle that accounting?
There's this move-based blockchain that's really cool. It's not live yet, but gets a lot of heat. I think they're pretty sick guys. But in reality, I think it'd probably be Ethereum to start a beta test, and eventually a permissioned private blockchain is what I anticipate.
Permissioned private blockchain, treasury issues bonds, can issue those auctions.
Yep. I anticipate like a very similar base model. I don't know if centralized sequencer L2 is probably the best. Maybe it's like some kind of side chain that has its like two validator sets that two validators run by the Ethereum government with a bridge to Ethereum. But yeah, I definitely think it'll be the Ethereum system to start off with, and then expand beyond that.
Potentially some form of governance where we can vote on how we allocate some of those treasuries.
Yeah, I mean that gets really egalitarian, right? I don't know if that's the short term. The easiest way I say this is like when we do foreign aid, we should use crypto. We shouldn't use like bank to bank payments. That's the number one like thing that I'm trying to push for right now. Is like when we do send money to Ukraine, can we send it on an Etherscan and just like let the public know like here's where the money's going? Because right now, like there's $100 billion that went to Ukraine that's unaccounted for. That's like today what I'm trying to do. Like people came after me for no reason. I'm trying to like keep this transparent spending, which is why blockchain. This is why we built.
Imagine if on like a big CNN news headline, Fox News headline for some sort of foreign payment, in or out, it was maybe it doesn't need to be public for all, but like there was some sort of way that we could have like, okay, this has been verified by X, Y, and Z parties who have opposing political views, are of opposing races or opposing social economic statuses or something. And this has been approved by 3 or 5 separate, almost like a multi-sig of people that got their eyes on it. And then we're able to tell the general public with some sort of, I don't know, like
I mean,
there's a lot
really,
of ways
like,
we can improve the transparency.
Really think about it. You can have like, what if each department of the government run a node and you have 10 nodes for this blockchain, and to reach consensus, you need 6 of these nodes. Like it gets really, really cool. You start thinking about like how like you can put consensus algorithms for governments, and like you can reach quorum for a Senate via blockchain, right? There's a lot of these things that are like fucking like why we built blockchains for the last 10 years,
And is this kind of the subject of your trip to DC? Is this kind of like what you're talking about, or you got?
Yeah, I mean,
those
like,
conversations a bit.
Again, like I got slack for this, but this is like what I'm excited for. Like I'm not in the space to like like launch more meme coin. Like I don't want to be another casino. Like I can do that and like probably retire in a few years. But like if we're trying to like actually get technology adopted, I'm willing to like be on a chopping block. But like directionally, this is where I want to see the country evolve, where we do have transparent spending. We have foreign leak is actually really important to me because like parents from India like have seen the worst in India, and like there's so much corruption happening, and like blockchain literally could save that. And like the people on Twitter from Iowa who have made $1 million of hyperliquid, they don't really get it. But like when you go to like Turkey and you see the earthquakes that happen, it's like holy shit, this actually can be solved with blockchains. But I'll die on the hill.
No, but forgetting all the Twitter noise, like what is it that you're trying to push forward? Who are you? If you're comfortable, who are you speaking with?
Yeah.
Like, are those public?
Like, it's like I mean, it's pretty public. It's like senators. It's like people part of the crypto division, like the House Republicans. Like everyone's talking about crypto now. It's actually a pretty big national priority, right? Like Senator Cruz has been talking about it. I was like with him I was with the team a while back. But I think like the main point is like how do we like people accept crypto now? So like how do we use blockchain is the question. Like the first part is education, like telling them like crypto is not a scam. That's like 90% of the job. Like Bitcoin is real, Ethereum is real. Like what is Ethereum? I don't even talk about movement at this point. I just like talk about crypto and like why it's important, and like try to get them to use Ethereum first. And that's actually like what the World Liberty guys are doing. Like I think the World Liberty stuff gets a lot of like flack for no reason, but like those guys who took on a summit have really good intentions. They're trying to like bridge the gap between like governments, Web 2 and Web 3, and like they're actually doing it. They're not touching a pitch deck and raising $20 million and launching a token. They're actually like trying to get in a government, and like the entire Trump family is behind it.
And I think this is where we bifurcate crypto and blockchain. Like crypto has the connotation that we were talking about earlier. It's a casino. It's fast paced. It's the first one to get in. The market structure is shit. 1% get rich, 99% lose money. Blockchain injects transparency, verifiability, and a general ledger into the largest financial system in the world. And so by focusing, to your point, on blockchain and not so much on crypto, we can start to bring in more of the crypto ethos through the technology and less through the finance.
Yep.
And I think, Rob, basically what you're getting at, and I know that we have to wrap here, boys, is that we are going to see a massive shift towards non-speculative crypto use cases, or let's say blockchain use cases, like we were promised in 2017 on the white papers for dental coins and for lawyer coin and for smart contract to replace Uber and for this to replace that. Like there's a lot of small things that were happening behind the scenes. And what Rushi's talking about, I think, is some of it where that's actually going to happen in the next 5 years in the biggest way that we've ever seen. And I'm sure there will still be speculative boom and busts that everybody who's on Shogun will love to be a part of, but it's that kind of next trajectory of the stable coins, of product market fit for the blockchains, that is really going to take the space's perception to like actually being cool in crypto, but not being like cool because you're rich and mysterious, but like you're like a part of society, where even doing this podcast sometimes and telling people about it still feels like you're not a true part of society in a weird way. So anyways, guys, thank you so much for joining us. Rahul, Brandon, Rushi, Robbie, signing off. It's been a pleasure.
Cool. Thanks, guys.
Thank you.
I ended up going on a rant there, but
Dude, I think that's so valuable, Rushi.